stocks trade soft but mostly range in the absence of cues ahead of the year end. Most stocks see red than green. Mid-caps underperform.
In his address to employees, Reliance Industries chairman Mukesh Ambani lays out his expectations from each of the conglomerates' business. He wants Jio to now provide unique solutions to the world, Reliance Retail to deliver significant benefits to all stakeholders, integration of media and entertainment with digital to reinvent the industry, and the new energy business to transform the world.
And Dr. Reddy says all claims against it pertaining to Revlimid generic have been withdrawn. The company, along with innovators Celgene and BMS, had been accused of restraining competition.
And Shriram Finance slides after new shares list post the merger. Spandana Spurti gains on a bad asset sale deal with an ARC, and Ashoka Buildcon perks up on order wins.
And the SBI chairman tells CNBC-TV18 that credit growth will unlikely be impacted by rising interest rates. Given strong demand and a likely peaking of inflation, he sees the comeback of contact services as a big driver. Good afternoon. Welcome to Business Lunch. I'm Sonia Shenoy, and with me is Pavitra Parekh. Well, things are a bit sticky for the market, but you'd have to say it's cooling off in terms of both volumes as well as traction. For now, the Nifty is down about 90 odd points, but the mid-cap index is the one that's bearing the bigger brunt in trade this afternoon. So 225 points low on the mid-cap index. If you're looking for sectoral movers, then banks are exerting pressure in the market right now. And you have a couple of other pockets like cement, consumption, etc. that's also not doing too well. But we're, drawing down to the last 2 days of the year and drawing a close to what has been a really tumultuous year for the markets. Give and take everything, not too bad for the index itself, and now holding on to 18,000.
Yeah, holding on to 18,000. And, for the rest of the Asian markets also, we're seeing pretty much a similar move come through. There are cuts yet, but very range-bound kind of trade across, Asia, Japan, the Korean markets as well. For our own markets in the past hour or so, you've seen the tech stocks move higher. So a few of those names will be up on your screen. All of them either at the flat line or, just moved into the green right now. On the downside, you are seeing a lot of the auto names, and you're also seeing a lot of the real estate stocks once again after what we saw yesterday. So those stocks are also something that we are tracking. But let's talk about the individual names, because that is where the action is. Shriram Finance is in focus today. The stock is trading lower by around 8% right now after it issued 17 crore new securities. So Vivek is here to tell us more about that. Vivek.
Well, good afternoon. So Shriram Finance clearly taking it on the chin today. Now, what's actually happened is that yesterday, the shares or the shareholders of Shriram City Union Finance actually got the shares into their demat account. So almost 17 crore new securities are available for transactions from today. And on the account of this, significant supply that's been added to the stock, you're seeing some amount of supply pressure or supply overhang. Now, remember, today cash as well as futures volumes are very, very high. And we also understand from, analysts as well as some of the dealer sources that there is significant amount of selling pressure also being seen from arbitrage funds who are playing for that particular event. In addition to this particular development, what we understand is that two of the larger shareholders, both Piramal Enterprises that owns almost 8.34% stake in the company, and also TPG India that holds a little over 2.5% stake in the company. In the past, they have indicated their desire to cash out or to sell their stake from the Shriram Group. And analysts believe that this now acts as an overhang for this merged entity. So overall, a lot of selling pressure, and till the time some of the clarity emerges on some of these events, you could see some pressure continuing.
Okay, Vivek, thanks a lot for that. Well, moving on, Bharti Airtel is looking to list Airtel's payments bank. Reema's here with the fine print on that. Reema, over to you.
Thanks so much for that. So as you pointed out, what we've learned is that Bharti Airtel is looking to list the payments bank. As of now, no details known about the timeline, but we're here to quickly tell you a little bit more about Airtel Payments Bank, which is currently housed in Bharti Airtel. Now, this is a payment platform, so very similar to your Paytm as well as Fino Payments. The services they provide are savings and current account, insurance, doorstep banking, payments, debit cards, etc. Airtel has about a 70% stake in Airtel Payments Bank, and one of the big benefits that Airtel Payments Bank offers to Bharti Airtel is that it helps reduce the churn for its subscribers. But where Airtel Payments Bank scores over its peers, as I said, its peers include the likes of Paytm as well as Fino Payments Bank, is that Airtel Payments Bank is the only profitable fintech in the industry. And they also have access to Bharti Airtel's unique users across their digital assets. So as I said, it's the only profitable fintech in the industry. So a quick word about their financials. Annual revenue run rate is now roughly 1,200 crore rupees. The EBITDA margins as of the Q2 quarter, September ending, was 4.7%. It is profitable. They have more than 50 million monthly transacting users. Monthly transacting users are basically users who've at least made one successful transaction in the month. If I have to compare it with Paytm, because that's the other listed entity over here, and it's a well-known one. Now, Paytm is much bigger than Airtel Payments Bank. Its size is close to 6 to 7 times that of Airtel Payments Bank. So whether you look at the gross merchandise value, GMV, or you look at the revenue run rate, the quarterly revenue run rate for Paytm is more than 2,000 crore, while for Airtel Payments Bank is roughly a little more than 300 crore rupees. But where Airtel Payments Bank scores over its peers is the profitability. Look at Paytm Bank's loss in the quarter gone by, in the September ending. It had a loss of more than 570 crore. In comparison, Airtel Payments Bank is profitable. It's been seeing a healthy double-digit growth. 50 million monthly transacting users for Airtel Payments Bank, and now it appears that Bharti Airtel would like to monetize it as well. Back to you.
All right, Reema, thanks a lot for taking us through this news. And with that, Bharti Airtel is one of the few gainers that we are seeing from the Nifty pack. Now, moving on, let's also bring you some important opinion. 2022 has been a stellar year for Indian banks with solid loan growth and an improvement in asset quality across the sector. So to understand what 2023 could really look like for banks, as well as the biggest domestic lender, that is SBI, we got in touch with the chairman, Dinesh Kumar Khara, and he believes that asset quality will continue to improve in the next year, although loan growth may moderate a tad. Listen in.
What we have witnessed in the current year in terms of the improvement in the quality of the bank books, I expect that the same trend should be continued in the coming year too. The reasons are very clear, because the kind of growth which we have seen is essentially riding on the growth of the economy which we have registered. When the rest of the globe is looking quite dull, perhaps India is a shining star. I think my expectation is last quarter, of course, we saw a very healthy loan growth, which is to the extent of about 20-21%. But going forward, it will probably taper down a bit. But I still expect that 15 to 17% is something which should be a reality. When it comes to chunky recoveries, perhaps may not be there, because all those low-hanging fruits have already been plucked. But at the same time, there's a definite improvement in the ecosystem as far as the recoveries are concerned. But still, because of these enabling environment, it would be possible to affect recoveries there also. So I would say that in terms of quantum, it may not be as high, but still we would see some kind of recoveries coming in with the help of OTS, etc. And I think that will it will be some kind of pace of improvement may not be as high as we saw last year, but still I would say that there would be some incremental improvement as far as the asset quality is concerned.
All right, that's the word coming in from SBI. The Nifty, by the way, has recovered about 60 points from the day's lows. So just pull up the intraday chart on the index and you'll see that there's a bit of a recovery, just a tad bit in the last 10-15 minutes. And that's perhaps taking the Nifty well above that 18,050 mark. Let's take a short break. On the other side, we'll get to the latest as COVID concerns rise globally. Do stay tuned in for that update.
Hey guys, welcome back. You're still tuned into Business Lunch, and some unfortunate news. Only a couple of months after Indian drug maker Maiden Pharma was in the dock for cough syrup-linked death of 69 children in Gambia, another Indian drug maker, that is Noida-based Marion Biotech, is now being held responsible for 18 Uzbekistani children losing their lives after they consumed this cough syrup. This was produced by the company. Abhimanyu is here to bring us the latest on this story. Abhimanyu.
Well, the company's representative had told the media in the morning that they are regretting the debts and are cooperating with the authorities. What we have learned so far that already samples have been collected from the company and production has been stopped. Uzbekistan has claimed that the death of 18 kids has happened after consuming the cough syrup, which was produced by Marion Biotech, which is based out of Noida. The company had claimed that the Doc 1 Max syrup, which is in question as of now, reduces symptoms associated with cold, flu, cough and fever. However, Uzbekistan's health ministry had said that the preliminary laboratory studies had indicated presence of ethylene glycol in the series of Doc 1 Max syrup. And this compound, ethylene glycol, according to Uzbekistan's health ministry, when consumed in high doses, can lead to several health problems, including death. So clearly, the issue remains under investigation as of now, even as the Indian drug controller and the Indian authorities are thoroughly investigating the matter. A joint inspection was also conducted at Marion Biotech's Noida manufacturing facility by CDSCO team as well as the UP drug control officers. It remains to be seen what further information will come out in the public domain as part of the probe, even as the probe is continuing and the company is claiming that it is cooperating with the probe authorities.
Thanks a lot for that. Well, moving on, let's also get you the latest on the ICICI Bank and Videocon loan fraud case. Former ICICI Bank MD and CEO Chanda Kochar, her husband Deepak Kochar and Videocon promoter Venugopal Dhoot were produced in court earlier today. The CBI did not seek further custody of the accused and informed the court that they could be sent to judicial custody for 14 days.
All right, that is the update on the Chanda Kochar and ICICI Bank Videocon case. But with that,
concerns rise globally. The health ministry says that the next 40 days remains crucial as India could see a spike in COVID cases in January. The virus, however, is only moderately severe. And even if the cases spike, it's unlikely that hospitalizations and mortality rates will be high. The centre is unlikely to bring back mandatory masking and fines for not masking in public places. International flight schedules are also unlikely to be affected, although passengers arriving from Southeast Asian countries may have to start filling the ESO with our forms again as early as next week.
okay, that is an update on the COVID situation. We'll, of course, keep bringing you, more on this through the day as well. But as we approach the end of 2022, the sugar industry is at the cusp of a mega structural change, and the prospects are looking bright. The government's initiatives on clean energy, cheaper financing, and multi-year tenders from OMCs have led to the industry building capacity to capitalize on the need for ethanol. So what's likely to pan out in the years to come? Surbhi is here to wrap up all of that for us.
Sugar industry is at the cusp of mega transformation. The government's initiatives to tie this sector with the need for clean energy is driving a structural change. Additionally, over the last few years, the government's initiatives have changed the fundamentals of the industry. The OMCs have issued multi-year ethanol tenders, which gives the mills long-term visibility. The government also increased the ethanol price in line with the FRP prices, which also increases the ethanol realization. Additionally, to encourage new capex in the distilleries, government gives loans at lower interest rates. In fact, this year itself, 228 ethanol projects have got loans of more than 18,500 crores. Sugar sector is primed for sustainable and green growth. The ethanol market is pegged to be valued at $16.5 billion by 2030. To meet all the increased demand, the ethanol capacity needs to grow 3 times by 2030. Ethanol production is expected to increase to 1,500 crore litres by 2026. In this year itself, the ethanol capacity has increased to 947 crore litres from 680 crore litres in the previous year. Some of the listed companies are doubling their capacity in the next 2 years with a capex of close to 1,300 crores. Now the question, why ethanol diversion makes sense? Higher demand for ethanol and better realizations have ensured that the excess gain is diverted towards more profitable products. This makes more sense as well as it yields better returns. Increasing proportion of B-heavy ethanol, which is the co-product of sugarcane, have better ROEs as well. The ROE on new ethanol plants with B-heavy molasses is much higher at 146% versus direct route where it's only 47%. Also, the payback period is only 2 years versus 5 years. In the last 5 years, the revenues from distillery segment has grown anywhere between 25 to 60% and the profitability has seen similar kind of growth. In the next 2 years as well, the revenue is expected to grow at 15% CAGR and the profitability to grow in the range of 25 to 30%. With this, distillery will contribute close to 50% of the profits by FY25 versus 35% currently and just 9% in FY17. Diversion into ethanol segment also helps companies deleverage their balance sheet. In the last couple of years, the combined net debt of the sugar companies have increased by just 100 crores despite a capex of 1340 crores. Higher profitability also had a positive impact on the company's cash flow. The net debt to EBITDA is likely to see a significant improvement from its current levels of 1.3 times in the next 2 years. The sugar sector appears to be powering forward with sustainable growth, which would eventually re-rate the sector.
All right, thanks a lot, Surbhi, for that. Let's slip into a quick break for now. Reliance Industries Chairman Mukesh Ambani completed 20 years at the helm of the company. Excerpts from his address to employees follows after a short break.
The halfway mark of its golden decade. In 5 years from now, Reliance will complete its 50 years. All of us are proud of what we have achieved so far, but the journey ahead is going to be far more exciting, more rewarding, but also more challenging. Let me spell out my expectations from the leaders and employees in all our businesses and initiatives. First, under Akash's chairmanship, Jio is rolling out the world's best 5G network across India at a pace which is faster than anywhere in the world. Jio's 5G deployment will be complete in 2023. I heartily congratulate the entire Jio team for further consolidating the #1 position in the digital connectivity business. But Jio platforms should now get ready for India's next big opportunity to provide unique digital products and solutions to both domestic and international markets. Since every single village will have 5G connectivity, India has a historic opportunity to completely erase the rural-urban divide which has plagued our country for so long. We can now ensure that no Indian will be deprived of access to high-quality education, high-quality healthcare, and high-productivity economic activities. This is how Jio can accelerate India's inclusive development. Second, under Isha, our retail business has grown rapidly. It has emerged as one with the widest and deepest reach in India across all product baskets. Most significantly, Reliance Retail has created over 2 lakh new jobs last year, becoming one of India's leading employers. I congratulate the retail team for setting new standards in disciplined execution, which is the key to its success. But I know that all of you in the retail team are capable of chasing even more ambitious targets and goals. Like Jio, the growth of our retail business will also have a cascading effect on India's inclusive development. Our young people will have more jobs, our farmers will have higher incomes, our SMEs and large manufacturers will become more productive, and our trader partners will become more prosperous. Third, we continue to build on our leadership in the O2C business with new capacities and capability. In the upstream exploration and production segment, our team continues to work harder for providing energy security for India. All of us are excited about the media and entertainment business and its integration with digital services that will reinvent the entertainment industry completely. My congratulations to all of you in these enterprises. Keep doing your good work, and I am sure you will scale higher summits of success. We are particularly proud of our JWC team that hosted the G20 in Mumbai, and of course, our life sciences team that is going on and charting new paths of innovation. Fourth, New Energy is Reliance's newest startup business with the potential to transform not just the company or the country, but the entire world. It shows that we care for the planet, we care for all the people on the planet. With Anant joining this upcoming next generation business, we are making rapid progress in getting our gigafactories in Jamnagar ready. From being India's largest and most valuable corporate, Reliance is now well on its way to also become India's greenest corporate. The goals before our new energy team are crystal clear. Enable India to achieve security and self-sufficiency in energy by reducing dependence on imports. And remember, you can do so only by remaining agile and ahead of the technology curve. Fifth, 2023 will also be a year of renewal and revitalization for Reliance Foundation. Under Neeta's inspiring leadership, Reliance Foundation is working on even more ambitious new initiatives in education, healthcare, sports, women's empowerment, and ecological and environmental conservation.